Markets appear to have skipped right over Moody's downgrade of US debt in trading overnight, with both Europe and US lifting and shares finishing in the green generally around the world in overnight trading. It was a fairly benign night. We did see bonds pull back from their recent yield highs, and we also saw gold slide slightly and the US dollar weaken. So it was a night of mean reversion. And that sets the scene for a busy trading day in Australia today, because we have almost universal expectations that the Reserve Bank of Australia at its meeting today will reduce rates by at least 0.25%, with some commentators suggesting they could go so far as to cut rates by 0.5%. Now, this is a very curious expectation given that the employment data remains very strong and inflation has only just returned to the target zone. The RBA Governor, Michelle Bullock, has been very clear that the RBA is uncertain about the outlook for inflation and growth, particularly in light of the recent trade and tariff disruptions to the global economy. So why the market is expecting a almost 100% chance of a cut today is a little beyond the numbers. That does set the market up for a bit of a surprise. If we do get a cut today, it's likely that we'll see strength across the board in the market and a modest lift somewhere in the region of 0.5% to 1%, with a particular focus on those interest rate sensitive sectors like the banks, the infrastructure stocks and the real estate investment trusts. However, if we get a shock today, and it is a possibility, and the RBA declines to cut rates, the selling that we'll see is likely to come across the board. Recent buying has been focused on those defensive sectors, suggesting that investors have taken something from the trade disruptions seen over the last month or so. That means that every sector is now vulnerable to a sell down if the RBA declines to cut today. And a sudden shock like that would not only speak to the Australian market and the Australian economy, it might have analysts around the globe wondering what their central banks will do when their turn comes next.